First of all, at FII, we like to check the pulse of where global investors are seeing not just this year, but next year as well. So walk me through it. Are you bullish or bearish 2025 and why?
You know, there's a persistent bearish narrative out there. I like to challenge it. So my short answer is I'm going to be bullish. This narrative that the U.S. economy is slowing, really, I don't see it in the data. The Atlanta Fed GDP now is at 3.3%. This is a live pulse on the economy. It started the year at 1.9. How can we say the U.S. economy is slowing? PMI services, that's an indicator of economic activity. They're at 55. That shows expansion. Earlier in the year, they were at 49. So the economy is not slowing.
Fascinating. And as we also look at the outlook, investors are, of course, trying to price the macro and market implications of next week, this critical U.S. election. We've seen yields coming up in anticipation, stocks also looking pretty volatile. Talk to me about the stock-to-bond correlation right now and what you're seeing playing out in the markets. What does it tell us about what could potentially happen next week?
Well, first of all, thank you for asking about the stock-to-bond correlation, because I've done research on this, and I think we don't talk enough about it. It's super important for portfolio construction. And you know what? If you look back in time, over 80 years, it has flipped sign 29 times. So it matters whether stocks and bonds move together or not. When we get interest rate volatility and inflation uncertainty, it's more likely than not that stocks and bonds will move together. And what I expect through the election is uncertainty around inflation and around long-term interest rates. So we could have a positive correlation between stocks and bonds.
Okay, so what does that mean? Should we expect both to move higher in tandem post-election from this point on, or does it ultimately come back to who wins next week?
You know, it's interesting, right? Because you can have a positive correlation when both asset classes go up and when they both go down. I'm generally optimistic on stocks for the next 12 months. So I think they could both go up together as we take some uncertainty out of the election. Look, really, if we're being honest, no one can predict the outcome of the election. No one can really predict the policies that are going to come out of the election. And no one can really predict how the market is going to react. But there's one thing we can say. It's possible, it's likely that some of the uncertainty at some point will be taken out of the market. So that could be good for both stocks and bonds. If we take out a little bit of uncertainty around deficits and just, you know, really extreme inflationary policies, bonds could rally, stocks could rally.